Titan posted better than expected results in the December quarter. Sales were strong across segments, while net profit almost doubled on a year-on-year basis. Scope of market share gains in the jewelry segment is huge given the higher share of unorganized players and regulatory tailwinds in the form of hallmarking regulations. And Titan is expected to emerge stronger in the jewelry industry going ahead. Massive expansion in the eyewear segment, another segment dominated by unorganized players, as well as watch business, will enable it to fire on all cylinders. Titan is among the best consumer discretionary brands with a mammoth brand equity. It's a must-have stock in the portfolio given the huge runway for growth. Titan's revenue in Q3 grew 32% YOY. Consumer sentiment was strong and festive season fueled demand. Jewelry, which is the key segment, led the growth momentum as pent-up demand along with marriage season boosted sales. Watch and eyewear segment also grew in strong double digits led by festive season. Operating margins improved 330 bips YOY to 14.4%. Jewelry segment margins improved given operating leverage, better mix, inventory gains as well as write-back of inventory aging provisions. Watch and eyewear segments reported greater margin improvement led by better product mix as well as cost control measures. Titan's net profit almost doubled on a YOY basis. Titan continued to gain market share in the jewelry segment. Mandatory hallmarking initiatives are helping branded players like Titan gain further share. Furthermore, Titan is introducing localized products that have enabled it to gain market share in rural hinterlands of states such as Uttar Pradesh, Bihar, MP and Tamil Nadu. Also, Titan is expanding its distribution reach and increasing its footprint across the country. Unorganized segment currently contributes about 70% of the industry, and large players like Titan have a market share of about 6%, which indicates huge growth potential. Titan is ramping up its network across categories. For the Tanishq brand, Titan aims to open about 50 stores next fiscal. For the overall jewelry business, including Tanishq, Pia, Carrot Lane, Titan aims to reach a store count of 600 to 700 stores over next 2 years. Eyewear business expected to see fastest and highest ever store addition, with the company aiming to reach 1,000 stores by FY23 end compared to current count of 700. It's also enhancing distribution reach in watches business. The company is also aiming to ramp up jewelry business in the international market. Titan would tap NRIs and people of Indian origin in international markets like Canada, US and GCC countries to boost business. It aims to open 20 stores in the international market over the next 3 years. At the current market price, the stock is trading at a PE of 73x of FY23 projected earnings, which is at the higher end of historical band. But strong earnings growth would continue to drive the stock, and we advise investors to add it to their portfolio.